Hello and welcome to another update video about ICP. Yeah, I was asked for a complete analysis of ICP and we're going to do that today. So I want to take a look at the long-term chart with you and we'll label it together. So we've got here on this chart, it's a daily chart, Kucoin, USDT, perpetual futures chart. We have on this chart, first of all, on the long-term view, not a really good outlook because the entire move down can be seen as a 5-wave move to the downside into the all-time lows. That is certainly not a great chart. The thing is, we might want to ignore it. I mean, it is important for context, but an Elliott wave analysis always needs to start at the all-time low. I mean, it doesn't harm to include it because we know the context is certainly not a great chart. It means we have to be on the side of caution, but Elliott wave works best in uptrends. If we have a long-term uptrend, well, we don't have a long-term uptrend here. It just means that here we have to be on the side of caution because this chart in its entire lifetime only moved down. It only moved down. So we can add here a line which tells us, well, see, this is the past. We should still consider it, but we shouldn't pay too much attention to it. Still, it means that based on the context, we could come up with wave counts like super bearish ones, right? Like this is a larger wave 1 or something and we're now in a wave 2 rally. I'd be inclined to, in a bearish scenario, to just call it a large A wave. We could be working on a B wave and then move down to new all-time lows in wave C. Yeah, why not start with the bearish scenario? The bearish overall scenario would be this one. So the white wave count is bearish. We have 5 waves down into the all-time low. And we could form a 3-wave move to the upside in a B wave. These can even overshoot. There is no limit to B waves really, but technically we are looking for a 3-wave move like an A wave, a B wave, and a C wave, something like that. And from then, you know, when this C wave is complete, we could go to new all-time lows. So there is no guarantee we will ever go to new all-time highs, okay, based on the context. We have to watch for this and we can talk about targets for that C wave in wave B. I would only focus on this. Yes, there are more bullish scenarios that are possible, but I would only focus on this. If we get to the target of wave C of B, we can still watch for something more bullish, but let's first see if we actually get there. If we rally in wave C of B from here, then let me just measure that. Then we are watching for $43 or that's the 100% extension or 69. Anything above, nice to have. Okay, so let's first focus on that. This would be an ideal target area. Yeah, maybe 92, maybe 148, but that would be quite a stretch already for a C wave. Now, in addition to that, now that we have an ABC labeled here, the initial move up is a 5-wave move in my interpretation. It's not a beautiful one, so it has a lot of problems, but you can call it a 1, 2, 3, 4, 5. So we have 5 waves in A, which means that my preferred scenario is that we go higher before we form a larger top. Because you could say in this overall scenario, this overall long-term, let's call it skeptical thesis, we could also say, yeah, maybe the B wave topped here, but that would be an alternative. So I leave it with a question mark. Yeah. So this would be an alternative, and then we would go to new. If we go to new all-time lows from here and lose all support levels, I would have to assume we're already in wave C. So the white count keeps the door open for higher prices as long as we hold certain support levels, and it is possible that if we break below these support levels, we would have to say, okay, the idea of a wider wave B isn't going to happen. This is already topped. Now, what are these support levels? Support for the B wave corrective pullback can be measured based on the start of the all-time low. And these might differ from exchange to exchange. And then we go to the top. And then we're looking for the 78.6 retracement. So this is it. This is the support zone. I can take the 50% fib level out because we already reached the 61.8. Now, it is important to understand that B waves can sometimes break below it. This is just ideal support between $4.37 and $6.10. It is possible that we go lower. I would call it this an invalidation point here, which is the all-time low. Again, technically B waves can even overshoot to the downside. It's just not ideal. Yeah. If we go down there and we break below the low, if it's just a wick, okay, this could still be a B wave. But the main purpose is that we have some fib levels here to watch where the market could react. I could even add the 88.7 fib level. So that's the idea. 5 waves up, 3 waves down into support. Now, again, from a more bullish point of view, this could also be a wave 1 to the upside, the pullback a wave 2, the rally a third wave, but it doesn't matter until we get up here. So for simplicity reasons, for me, this is between, okay, we get another rally, which from the current perspective out would be a C wave, or if we break support, then we've already topped in wave B and we are moving down. Yeah, so it's bullish and bearish case with a pivot in between, which, well, ideally it holds 437. Below that, it's already getting more and more likely that we're breaking down, which means from a long trade point of view, I mean, this is it, this is the area. The thing is, it's this structure after the low on the 5th of July is problematic. It really is. It would be nice to call this just an A, B, C to the downside. Easy, we could just call that an ABC structure. And we have 3 waves down. And, in that C wave, we have enough waves. It could be 1, 2, 3, 4, 5. It's technically complete. The problem is that this here doesn't convince me. It doesn't convince me. So when we talk about getting into a position, I mean, it's a little bit difficult because this is just an AB structure and B waves are less predictable than, for example, a wave 2. But again, it could be a 1-2 setup. Now, again, normally I would say ideally we hold this support. Ideally holds here. So some people might set a stop below the 78.6 retracement. If you scale in, one strategy to buy this would be, you could even scale in all the way to the low. I mean, it's all, that's a personal decision, right? You could just add, but the position size needs to be calculated to the level where you want to stop out. Now, different levels where you can stop out. You could stop out below the 78.6 fib level. Ideally, it doesn't go below that. You could stop out below the 88.7. I mean, it's very deep for a B wave, but possible. Or you could stop out below the red line. So these are the stop out levels to trade an AB structure for a C wave rally. This is if you're trading the larger cycle for a long trade. I mean, I wouldn't call this a long trade setup because this is literally just for spot buying in the decline, where you just need to be careful because we have no confirmed low in place yet, okay? So it could still work against you a little bit, which is, if you use this strategy, it could work against you for a while. That's why position sizing is so important, that the largest position is down here and might never get filled completely. But if you buy here everything, then you will get panic when you go down, when the price goes down. Now, in the very short term, it is possible that we say, okay, maybe this move up is, the problem is the rally from the 5th of July is a 3-wave move. So it is possible that we've bottomed already in wave B, but that's only valid as long as the 5th of July low is holding. Any new lows would just be an extension of the B wave, but there is a case we could make that we've bottomed, but it would be a diagonal pattern, something like that. If this is the case, and you could go long, if we talk about long trade setups, if you set a stop below the 5th of July low, for example, this would be a short-term setup. I just find it not so great, because this is a 3-wave move up, so it's not clearly 5. And this is problematic. This means the move up would be a diagonal, like on the ETH chart. If you watch the ETH video, so A, B, and then 1, 2, 3, 4, 5 in wave C. So we have 3 waves up. So that means also the 3rd wave would be an ABC structure. So it's all getting quite problematic and messy. So I wouldn't trade for precision here. That means also here, the A wave is likely an ABC structure. And that's where it doesn't make sense to go any smaller, right? But it's forming a higher low, so it's promising. So if it breaks out, that could be something. Now, possible trading ideas. Now, again, you could just set a stop below. You could even set a stop below the 5th of August low. These are all, you can always set a stop below the last low. And I think there's a good chance to go higher. You just need to measure your position size to the stop. A breakout idea would be draw a trend line. Let me just check that. Let's see if we get some decent trend lines here that we could draw for possible breakouts. Sometimes there are none. That makes sense. But this doesn't look too bad. Yeah. I mean, this would be a trend line with 3 touch points. I would encourage you to draw that on your own. It's no financial advice, right? But these are 4 touch points. Again, they might be slightly different on each exchange, but possible breakout trade, okay. Just be aware you need to always measure your position size to the stop. Now, there could be, how you do that is up to you, but one way could be to just, here, move up with the price and have a stop below the trend line, but it's only got 2 touch points here, so that's not the most reliable one. Essentially, there are hundreds of ways to trade this chart. You just need to know where you want to stop out, and that is dependent on the personal risk profile. But overall, yeah, that is the ICP chart. I think there's a good chance for it to go higher. It's just not highly probable because we don't really have high quality structures here that allow for high quality setups. The overall structure suggests rather an AB structure. Okay, could be a 1-2, okay. But in the smaller time frame, this is just a 3-wave move up. If we now move higher, then it confirms further my idea that this is a diagonal pattern, or no, that we're actually moving up in wave C of B, because a C wave can be such a diagonal pattern. If this was a 3rd wave rally to the upside, it couldn't be a diagonal. So that's what I'm watching. This microstructure is likely going to change, but that is sort of what we see right now here on the chart. That's the update about ICP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.